Hello guys, welcome to WunderTrading channel. In this video we wanted to describe in details how to use the DCA bot. This is a very important feature on our platform and we want you to use it correctly. My name is Kirill and my colleague Evgeny is here.
Hey, so today we're going to cover a few aspects. What is actually a DCA bot? How you can trade DCA strategy? What are the options? How to select the right pair? At which moment you should trade specific pairs? What are the entry conditions for the DCA strategy? Now we're gonna cover WunderDCA strategy that we've built for the TradingView, and you can use it absolutely for free. We also gonna cover all the settings that the DCA strategy includes. We're gonna follow that with a calculator review that we've built on our own, and we're gonna spread it for free so you can easily calculate the risks and find the right money management strategy for you. And finally, we're going to cover some of the frequently asked questions, including the anti-cases of the DCA, which pairs can crash you, and some other important stuff. So let's get started.
Okay, so let's start with a very simple thing. What is DCA? DCA, or dollar cost averaging, is a specific strategy where you try to purchase extra amount of the asset when the price is going not in your direction. This will help you to average out the price in your favor. So let's have a quick example. Assume you bought an asset worth of $100 and then the price moved not in your direction. After a short fall, you can purchase another $100 worth of that asset. This will drag down your average entry price and at the same time average take profit price. If the asset will continue falling, you can continue purchasing extra amounts of the same asset, bringing the average price even closer to the current price of the asset.
To follow up on the DCA strategy, there are actually three ways how people normally trade the DCA. And in all cases, they call it a DCA strategy. So the first and a very popular way of trading a DCA, specifically across the investors, is called basically it's a recurring buy. So you would buy, let's say, a Bitcoin for $100 every single month. And in this way, you will average out your price of the Bitcoin that you will hold. It's also called a DCA. The next way of trading a DCA would be to average out every time the price of the asset will fall, and in that way you will average out the position and you will be a bit closer to take the profit. And the third way actually is normally called as a Martingale bot or a Martingale strategy, or sometimes DCA Martingale. In this way, every time you will make an extra order, you will use a multiplier on the volume that you used to buy. So there are three topics. Now let's get to the WunderTrading platform and let's see what the DCA bot can do for you. Okay, so let's get started with the WunderTrading platform. So once you're on the home page, go to sign in, and then here we go, we're in the dashboard. And from the dashboard, we can open the DCA bot. Here you go. So the first thing you see is the chart where the price of the asset is shown. And then on the right-hand side, you have the section popular, which is the best optimized crypto pairs, and they show you the ROI for the last 2 weeks that you could earn if you would start a DCA bot on, let's say, Algo USDT. And then if you click copy or simply switch to the manual section, you will have all the settings that you can set up. So once the account is set up, the first thing you should set up is the crypto pair. So Kirill, what crypto pair should we use and in what cases?
Yeah, that's actually quite a good question because the major problem is, from my perspective, is selecting the asset that you would like to use for DCA bot. One of the core things that you have to look out for is the liquidity of the asset. This is quite crucial and important. The reason behind that is that if the asset that you're going to be using is not very liquid, doesn't have enough volume, then you will have an increase in the slippage, which means that as soon as the market order is triggered, you will get the price not that you intend to, which will ruin at some point your calculations and will not be reflected in your backtest prior to the execution. That's number one. Number two is that overall volume should be around 100 million per the last 24 hours. So the last day should be quite intense in terms of the volumes, and you will have plenty of pairs that actually breach this threshold. The third thing to look for is to make sure that the certain pair is traded on several exchanges. The reason behind that is to make sure that it's not going to be easily manipulated. So all these things combined will give you quite a steady pair in order to try and use the DCA. Probably the extra bit, it's going to depend on your strategy, but it's quite nice to select the pair which is actually trending in either upward or downward direction, depending on what are your directions in the DCA bot and what is your strategy. It is also possible to trade in the narrow flat channels, which is supposed to be quite volatile in order to execute the trades, but the easiest way is to go with a trend. So yeah, that's probably the top criteria of how to select the correct pair for the DCA bot.
Awesome. So let's move on. And the next important thing that you need to set up with the DCA bot and any DCA strategy is what will be the entry condition. So there are several ways that you can set up. The first one and the most simple is the immediate. So at every point in time where you don't have any open positions, just open a new trade. And then you would mainly rely on the DCA strategy itself to average out and to take the profit. The other start entry condition that you can use is to use the indicator, and there are several options. Kirill, please tell us what are the options and why is indicator a better option than the immediate start condition or not, actually?
Yeah, sure. So as you can see, the bot start condition can be also an indicator. By indicator, we have several very popular indicators such as RSI, MACD, Bollinger Bands, and the price change. Basically, the indicator will assist you to enter only at a certain period in times when you're expecting, for example, if we take the RSI, when you're expecting the oversold region for the long DCA bot. The price change is working, for example, in exactly the same way. So when the price is dropping by a certain percentage in a certain period of time, you would be able to enter the long condition. But as Evgeny just mentioned, there is a drawback to this in comparison to the immediate entry. For example, the indicator will make sure that you enter only specific times, which will significantly reduce the number of DCA positions that you're going to open. At the same time, they're going to be much more safer and predictable, and you will be able to decrease the number of extra orders that are included in the DCA. Therefore, you would be able to put more funds into your DCA bot and at the same time make sure that it will not be liquidated or taken into the huge leverage positions. I think the only way to compare this is just to run a quick backtest on the same settings. So, for example, let's take the immediate bot start condition for the Algo USDT pair for long, The amount per trade will be just $50, and then all the general conditions are outlined in front of you. So the maximum number of DCA orders is just 18, the price deviation is 0.8, the order size multiplier is 1.1, and the price deviation multiplier is 1. So let's check the backtest. As you can see, the number of realized trades is actually quite high for that asset. It was able to withstand the dramatic decrease in the prices, but at the same time, if you look at this particular narrow range, it was quite comfortable with the entering as soon as it does not have the new position. So 429 trades. Let's compare this, exactly the same settings, with the indicator, for example, RSI. So we just one more time going for the back test. And we can see that based on that particular condition of entry, we have just one single trade. At the same time, the point of entry was actually quite nice. And it is plausible that you can use such an accurate entry conditions and increase your take profits, for example, or reduce your number of extra orders, which will allow you to put more funds into it. We have actually quite a lot of the information about the indicators, their settings, and all the features that we have in the DCA bot in our documentation. So please read it carefully, and you will find all the answers related to the indicators or the DCA settings in the documentation. So shall we actually talk about the DCA settings right now, Evgeny?
Sure. So let's have a quick overview of the DCA settings. So there is a number of safety orders that you will have, the price deviation, sort of a step, and then a few multipliers, one multiplier for the order size and the other one for the price deviation. So be careful with the multipliers, because it actually affects the number of your position quite significantly. Let's have a quick look. So if, for example, the entry amount per trade that I said is 100 USDT, and I will have, let's say, 18 safety orders, that will mean that the maximum position I will have is 1800 USDT. At the same time, if the order size multiplier would be increased to just 1.1, then the required amount is now even more than 2 times higher. If I set it to, let's say, 2, then it will actually be very dramatic. So really be careful with the settings. It's totally up to you how to set it all up. So let's have a quick optimize test now, and let's see what the settings are. So we have quite safe settings and the results are quite decent. Now you can also set up a stop loss and move stop loss to break even as an option, or you could use a trailing stop, but be careful if you apply a trailing stop, know that the take profit target should be a lot higher in order to benefit from the trailing stop. Otherwise, if they overlap, then there will be no sense in using that. Now, you can select a backtest for any pair on the WunderTrading platform, and that will cover last 2 weeks. But you can also go to the TradingView and select an indicator called WunderDCA Bot that our team produced for you. Now here you have plenty of settings. Kirill, please tell us a little bit about the indicator.
Sure. WunderDCA Bot is the Python script that we wrote specifically for you. It's free to use. You can, as you mentioned, go to TradingView, select the indicator called WunderDCA Bot, and then you can play all around with all the settings that we have. So first of all, you can change the direction. You can test it either on the long direction, short direction, or both. Then you can select the take profit type, whether it's going to be based on the average price or it's going to be based on the first entry order. And then the condition types. You do have the similar ones that we have in the DCA bot on the platform, such as MACD, RSI, price change as soon as possible. We also have the extra ones, something like a breakout. And at this point, I just wanted to mention that if you would like us to add any other condition, any other indicator inside of this one, please write a comment below this video and we'll do our best to add it to the Pine script. Next, all the sections that you see further are related to the conditions that you select in the third row. So for example, if you select the MACD as your condition type for the entry, then this particular section over here will be providing you with the flexibility of tune the MACD indicator the way you like. And as soon as you turn something, it will obviously change the backtest result. The last but not least is that you can easily automate this script using WunderTrading signal bot. You just put the long comment over here and the short comment over here, which is provided in your WunderDCA signal bot, and it's gonna fire the alerts as soon as the TradingView will send the alert. But the most important thing here is probably to see the deep backtest. So for example, if we go to the 1 minute time frame and then we select the deep backtest, and it will show you the full backtest. But there is one very crucial and important point. The purple lines, which you see here, are the maximum drawdowns. And at some point, if you will not calculate the risk correctly, you will get liquidated. And that brings us to a very important thing about any bot. It's not just a DCA bot. You have to manage the bots daily. It's very important that you don't just press the button to start the bot and think you're going to be a millionaire next day. You will have to manage and monitor them very quickly. The best part is that you can easily change the settings the way you want. The DCA block or any of the conditions over here, and then run several backtests, either on a 1 minute time frame, 5 minute time frame, or a daily time frame, the way you want. This is a very nice tool that we specifically did for you in order to have the deeper backtest.
And now let's talk a little bit about the risk and money management, as this is absolutely crucial to tune it correctly for the DCA strategy, as the DCA is a great way to average out, but at the same time is absolutely important to calculate what funds you can allow to trade in the position, in safety orders, etc., and what to expect. Okay, guys, so let's have a look at the DCA Strategy Calculator. And here you can see the loss that we will have once we have more extra orders executed, what the balance will be left on our account, and what the leverage will be. With a quite safe settings, having a volume multiplier 1.2 and a price deviation 0.8, having a trade size of 5% of our portfolio, which is 1000 USDT, we see that if we have 20 orders executed, that is one entry order and 19 safety orders, it will mean that the loss we will have would be by the 20th safety order, the loss would be 55 USDT, and the actual leverage that will be applied considering the total volume of the position would mean a 10x leverage for us. Now, to show you how extreme the volume multiplier can be, let's set it to 2. And you will see that by the 10th but actually nice safety order being executed. The actual leverage that will be applied to your account will be 64, so this is very dramatic, and you will be liquidated somewhere there. Yeah, so this is a quick overview of the calculator. We will make it fully available online for you to play with it. And now, I guess we've covered most of the aspects of the DCA strategy and the DCA bot. So let's have a quick FAQ here. So Kirill, what do you think? Should you play with the direction of the DCA strategy? Like playing with a long only DCA strategy is quite straightforward. What do you think about having a short strategy?
Well, not in this particular market. I wouldn't recommend that for sure. However, there are pros and cons, as usual, guys. So one of the examples could be that if you select the asset, which is actually in the channel, in the horizontal channel, then yeah, you would be able to make some gains on the short DCA as well. For example, you take any indicator as your entry condition, such as the RSI, and you just put it to the extreme overbought regions, and then making sure that you have some extra space there for potential divergences. However, in this market, as we seen right now, that's actually going to be quite dangerous just to try and short the market, because we can see that the certain assets are just pumping quite heavily, and the indicator as an entry condition will not save you. The reason behind that is that it can stay, for example, the same RSI indicator can stay overbought for quite a long period of time. So that's why originally in the beginning of this detailed review, we emphasized that it is quite important to trade with the trend, along the trend. So you can have the short retracements where your DCA is going to be filled, and then you go in the direction of the asset. So yeah, that's quite challenging to put the short DCA into play.
Good points. Good points. Now, another quick question. Many people would like to have a bot that you created and it just works and make you money and make you rich. Everybody's looking for the button, make me rich button.
Yes.
All right. So, do you think you can leave a bot for a long period, or should you look for another pair, another setting every quite a while? What do you think here?
Yeah, I want to make a clear distinction here, probably, between those traders who would like to scalp the market and those who are there for the long term. For both of them, the DCA is going to be quite applicable, but the settings are going to be different. And the main thing here is that if you want to scalp the market and you place quite small steps in between your extra orders and the very small take profit target as well, then you will have to monitor the bot quite thoroughly. For example, early in the morning, you set up several DCA bots. You found the pairs which are actually quite volatile, for example, or have a certain direction in this movement. And then you trade throughout the day. By the end of the day, you just turn them off, and the next day starts, and you just redo the process. So you actually monitoring the market very regularly, and the bots as well. The second option is that you are actually trying to accumulate a certain asset over a period of time, and it can vary as well. It can be either for months, or it just can be within the single week, for example. And in that case, you will extend the distance between the safety orders. It will make it much more simple in terms of it will not get extra orders that quickly. Therefore, the idea of liquidation will stand on a side somewhere. So you would be able to monitor the bot less often. However, in both cases, as I mentioned, you have to monitor the bot. Unfortunately, there is no such button as just make me rich.
Okay. Now, there is one problem with the DCA bots, if you trade a long strategy and it happens that the market crashes,
Yeah.
and it can mean that you will be stuck. The position will be stuck, not technically speaking, but you will have a significant loss.
Yeah.
And now you can have different strategies how you um, get out of that, whether you would simply take the loss or you would wait until you make some profit. So what the strategy here, in your opinion, would be a good one?
Yeah, I think for that particular case, I want to switch to TradingView just to actually show you one example over there. So if we talk about such case, I'll switch to the daily time frame and then we'll go to the REEF pair. So yep, here we go. You would be able to see it on the graph that this is exactly what happened to REEF. So I'll switch off the DCA so we won't see any extra marks over here. But this is a wonderful example. If you turned on the DCA bot at the beginning of this rally with large volumes and stuff like that, you would be able to gain quite a substantial amount in profit over more than a month period, 43 days. But then at some point, it will just drop dramatically. So, for example, you are using the immediate condition for entry. So anytime you don't have a position, you're gonna enter, and you may enter right at the top of that asset, which means that you're gonna be stuck. Well, the first thing first, if you don't calculate the volumes correctly, 100% you're going to be liquidated here. So if you're going to use the leverage at this particular stage, unfortunately, your account is going to be liquidated. The second scenario is that you use the volume more accurately, and all your money, all your funds, for example, are just stuck in one particular asset, like REEF. What you can do here? Option number one, you can just wait, if that's applicable to your strategy. The whole point here is to look at the macro picture of the asset, to understand why this particular asset dropped so heavily. If you understand that this is the temporary shock, then it's fine. You can wait and expect it to grow. Second thing, if you understand that something happened with a product or with this particular project, something dramatic happened, then maybe it is going to be easier just to accept the loss. And this is where the crucial rule is coming into play. Do not create just a single DCA bot and put all your money to just a single DCA bot or any bot. You have to diversify into different assets, into different strategies. This will help you to keep the balance throughout the months. The third option, which is also applicable, is you are just adding extra money over there. So for example, if you started your DCA somewhere right at the top and then it went down quite dramatically, you can still place extra order directly on the exchange at the bottom. Once again, confirming that or assuming that this asset is actually gonna come back and there will be something to drive the whole asset up again. That's why it's quite important to justify for yourself whether you are using any stop losses while you are activating the DCA bot, or you actually prefer one of the options that I just talked about, that you're gonna keep all this drawdown, and then just wait for the asset to go up. Yeah, so those are the options that usually the user will have.
Sounds good. Sounds good. So I guess this is it for today about the DCA strategy and trading with a DCA bot. I guess we will have more videos on the DCA. Please write your comments in the comment section below, and we will definitely make more videos on that. Thank you very much for being with us.
Thank you guys, and we'll see you next time.